SwissBorg is the official partner of my channel where you can buy, sell, hold, and more importantly stake your cryptocurrencies. You can even earn yield on your stablecoins. Sign up with my link and you'll earn up to $100 worth of their native token CHSB just for depositing €50 worth of crypto. SwissBorg. Hello everybody, welcome back. So a savage move yesterday on Bitcoin and crypto alike. The thing that I've boiled it down to is looking back at traditional markets, obviously not catching any kind of reprieve from the currency situation. So we've not really seen any kind of attempt to bid for this euro around this 95, 96 area. Now, if you go back in time long enough, which is where we get the supports from, basically going back over these zones. If we zoom in a little closer, you can see that it is. I call it 96. We want to be above 96 to see a bounce. But technically there is a bit of a boxy zone if you were to really think about it, and so it starts around 96 where these supports on these weeklies are. There is also a little bit of an attempt to hold around 95 too, so we're still technically within the potential area for a bounce, if that's the right word for it. I suppose that's all we're really looking for. But as we've said for the last weeks and months, you know, the direction for this currency, the euro and the pound, is down. And you know, my major low targets for the euro is going to be around 50 cents on the dollar. So that doesn't change. That's all very much, you know, the major target really, based on the monthly short signal, which is in my opinion still in play. This is just a pit stop before we start to approach new lows. Obviously the pound already reached new lows, so far holding around that 106, which again, you know, can act as support, but we'll see. Central bankers are going to help with this, or should I say not help. That's why we're sort of hanging around these levels and still continuing down, because there's an expectation that the central bankers are going to say or do something to try and recoup some of these losses, strengthen the currency. But so far, it's not really been done. So we turn our attention over to the VIX. The VIX is really sort of pushing up now on this weekly. VIX above 40, crash territory. Really, definitely crash territory. Yeah, to be honest with you, seeing it pushing up so aggressively so far makes it feel like a crash is almost it could take place today. Not saying that it will, but it could. So the one thing I was going to look at before we go into detail with Bitcoin is that part of the reason I think Bitcoin had such a savage reaction is that we actually started to make a new low. We created a new low yesterday on the daily for the S&P. So this is a problem for traditional markets, because they're like, all right, okay, so the downtrend is going to continue. This consolidation or bear market is going to continue. That's fine. This isn't like the everything bounce, although we could still bounce. We're above the 200 simple moving average. The everything bounce we got around here, it was about 2 months worth of upside. We had a great time, and this is why we're sitting out the market for the most part September, waiting for a new range to be established, whether it's a higher or most likely going to be a lower, but whichever direction it's going to be, a new range is going to be established, and it started to be established yesterday on the S&P. And so with that in mind, everything started to sell off, and crypto is weaker than most markets at the moment, as its 200 weekly is all the way up here at 23,400. You know, you think about, you know, what that means. It's extreme weakness basically. And if you think about something like the S&P, we're yet to revisit it. We may find a reaction from there. Same with Nasdaq. We are on it at the moment. Nasdaq not made a new low as yet, but we are on this major moving average. Now, if we have a look at the Nasdaq for an example of the last time we came down to touch this was leading into the financial meltdown, the housing market collapse 2008. So this adds a little weight to the idea that we might find a bounce from here, because we touched the moving average and then bounced and then came into a huge financial meltdown. Same thing happened in the dot-com bubble as well, so we can have a look at that, backtest that for a little bit. We were downtrending bear market, came down 200 exponential, tagged it, pumped and dumped. And so we could be thinking about the same kind of reaction taking place here. And again, this is why I call it, you know, that's why I've been saying, if we get anything, it's going to be the last pump before the dump. And you know, this goes back to why that could be the case. It's not very often you get a 200 weekly moving average tagged on traditional market major indexes, and this is this is one of those occasions. We're getting it. So are we going to have one of those, you know, moves up from here? Again, we're looking at things on a weekly. If we do get it, you know, we might get it. We might get it now. We might get it this week or next week, and then that leads into the the next move back down again. So do we move back up to this trend line, 10% or so over the next few weeks or so before we start to establish new lows on these major indexes? And if that's the case, the first major area would be the pre-pandemic highs. That's a 15% drop from where we are right now on the Nasdaq. Maybe even go down to the previous highs of that, which was another 30% from where we are right now. You can only imagine the knock-on effect on something like Bitcoin when its major, I suppose, correlated indice starts to move down 15 to 30%. That gives us those areas that we've speculated for quite a while now, down to the 12,000, isn't it, really? At best, 12,000, 36%. So all of these are still on the cards, and this is why I say if we get the bounce, we get it. And there's a realistic reason why we might get it, while the pound and the euro still technically at the supports, and S&P and Nasdaq technically at supports. But if these supports break, huge change of behavior takes place on the longer term time frames, really spitting out fear into the market, which is represented here on quite a vicious move on the VIX as well. So it's not looking particularly good, I have to say. The hopium would be is that if everything's at support, maybe they can all join forces and bounce together, and we get that last bounce before the crash. But historically, it does look like a crash is more likely than anything else. I wouldn't say it's inevitable, but it does seem very likely at this point now. Whether we get the bounce before the crash, what is this, Wednesday? So the bounce could begin any time from Monday, any time over the next few weeks. Really, we are looking at things on weekly time frames here, so it's not futures traders central here. We're not on the crack trading 5-minute charts. We are speculating to previous performance on indices, and they, even with a bounce, it would end in a crash. We are looking at some kind of global recession, which it could indicate a difference in just looking at the charts. We shouldn't really expect any of these to do anything significant, given all the things that are going on in the world with Eastern Europe and China, and major inflation as well. So there's a take your pick. There's a lot of reasons to expect a crash. Black swans circling the charts right now. They're not even that black, really. We can see them clear as day. They are just swans. They're vultures. They're vultures pecking at us. We can see the whites of their eyes. So it is what it is. Let's hope for the bounce. If we get it, excellent. We can take advantage of that if we see a reaction. But still, even by doing that, you're putting on the table more risk than reward. I wouldn't expect to see phenomenal gains. In the S&P and the Nasdaq, 10% maybe. In crypto, 20, 25, 30% up. It's still, I'd still say the risk outweighs the reward, which is why, again, like I say, we sit this market out through this September month. We had a great time throughout the summer trading with some really good gains there, and we didn't want to really particularly get clever. We can speculate on this bounce right now, but I have to say, my positions are small. I'm mostly doing derivatives and futures. I'm looking for long-term spot positions, investment style, as and when we crash. I've been putting a major focus on all of that for the majority of this month, really, trying to plan for what could be a really good opportunity for a long-term positions in many things, bitcoins, altcoins, the lot. But for now, it's not really that kind of time. If anything, it's small, scalpy little trades, and they're not really materializing at the moment. But the bounce before the dump is still technically in play. We can't rule it out. If anything, we might look back in a couple of weeks and say it was the obvious play. But even the pump before the crash ends with a crash. So whether you miss out on the pump and watch the crash, or you try to take advantage of what could be a pump and get out before the crash, it still ends with a crash. It doesn't really appear that there's any other way to avoid a crash, and so the main thing to focus on is the word crash here, which seems inevitable in all of these charts. There's the only thing that's probably not going to crash immediately would be the Dixie, and the Dixie will inevitably start to come down after a crash, but for the moment it's not. So yeah, the crash is the word to focus on. Whether we pump 30%, and crash, or we just crash. Anyway, I'll leave it with you there. Thanks for watching. Hope you have a nice day. Take it easy.